Utilities having a rough year so far. The SPDR ETF ticker XLU down more than 18% so far. But KeyBanc is seeing some buying opportunities on the pullback. In a recent note, analysts advising investors to, quote, close your eyes and buy. Upgrading three energy names like DTE, CMS, and CenterPoint to overweight. Shares of all three are down between 10 and 20%, as you can see there this year. But downgrading NextEra Energy to sector weight. That was, by the way, our mystery chart that we showed you. So joining me now is Sophie Karp, utilities and alternative energy analyst at KeyBanc. Sophie, rising rates, they're a problem when utilities are supposed to be those dividend payers that compete with bonds for income. How much are rising rates a problem for the utility sector?
Hi, good afternoon. Thank you for having me. We think that interest rates for sure are a valuation problem, quote unquote, for the utility sector in the sense that the dividend yield competes with, risk-free yield. But when we look at the valuation in the utility space, it is as cheap as it has been in well over a decade on any metric that we can see, right? We look at it versus the S&P 500 versus the bond yields themselves. And we honestly have not seen such a dislocation in this sector pricing-wise in well over 10 years. So this is why we're confident recommending that investors get into the space right now. It was overpriced, we thought, going into the year, and I was on the show in December recommending people to not get into utilities on that basis. But right now we're seeing what I think is an excellent entry point for a number of high-quality names, which we have upgraded.
Sophie, some investors have talked about this idea that higher interest rates are also problematic for certain companies with a lot of capital budgeting geared towards using debt. So if you're capital intensive, like many utilities are, and you have a lot of debt on your balance sheet, that those rising rates at some point become a problem. Is that your view in this case here as well?
No. Simply put, no. Utilities are entitled to recovery of their cost of capital by law, right? And so while there might be a lag in the timing of that recovery, depending on the utility and the jurisdiction, ultimately the rates will be passed on to the consumers, right? Through rates as utilities update their rates to rate cases as they go along.
And Sophie, which stocks we mentioned three of them that are your favorites. What's the common thread for those three?
So given where we see the valuation for the space, right, we just recommend that investors focus on high-quality names with minimal overhangs that are very attractively priced. And so this is the common theme, right? We think that CMS, DTE, a number of other stocks, Ameren, Excel, Wisconsin Electric, all of our buys, CenterPoint in that mix are, in fact, very attractively priced, clean names with minimal regulatory overhangs and no potential negative catalysts on the horizon to speak of. So we feel pretty good recommending them at this point.
Okay. Sophie Karp at KeyBanc with the call on utilities. Thank you very much. We appreciate it.